Good morning. Jeffrey Friedman, Senior Commodity Broker, RJO Futures, here this morning, February 28th, the last day of the month. Stock Index Future comments. I usually give you a word of the day, and I will, and I'm going to surprise you. Word of the day is not going to be GDP. It's not going to be initial claims. It's going to be Bernanke. Now, Bernanke talked yesterday and Bernanke talked the day before, but his impact on the American economy, stock index futures, and global stocks in general, or the economy globally, is more important than weekly initial claims. It's actually more important than GDP, even though it's a monthly report on a quarterly basis, because that looks backwards. And what he had to say looks forward. What are we going to do? How can we justify QE4, QE5 maybe coming up? When will it end? How will they stop it? Will it cause inflation? So I have said that another major concept, okay, would be Europe and the elections and how it affected global economy. Now, when the elections came out in Italy 2 days ago, it made the stock index futures, I hate to use this word, but I'm going to use it anyway, go down very quickly. Okay, we were down almost 30 full points in the S&P, which is a very big market, a lot of volume, hard to push around, but it was kind of like panic because that concept would hurt the economy. So have said that, the three things that I think is most important: Europe and how they're going to handle entitlements and their debt situation, America, Obama, our Congress, and how they're going to work out spending cuts, which will affect our deficit in America. And then the third would be Bernanke and how he stimulates on his end of the economy. Now, have said that, all the other things, yes, our economy is kind of improving slightly. I'll give you an example. Look at GDP real quick. What was the actual today? Very quickly, a positive 0.1, and we were looking for 0.5. What does that mean? We couldn't even do 0.1% better in expansion growth for goods and services. That's a little disappointing, but the stocks index futures shook it off. Let's go into technical analysis because we spent a lot of time on fundamentals, and I'm trying to give you what I think is going to be important and what you really should be watching for the next couple of days, the next couple of hours, and the next couple of weeks. And I'll be back probably early next week to give you some updated data. But on a technical point of view, we are still in an uptrend. When we were on the highs, which were around 1530 front month S&P futures, we were up about 7 to 8% for the year in less than 2 months. You cannot continue that rate of growth or appreciation on any kind of price pattern, in my opinion. So, have said that, we had a pullback, okay? We are still in a sideways to uptrend, in my opinion, looking at the charts. I would have to say that we're going to be, I anticipated that pullback, okay, and that is evident by our roundtable discussion that RJO put on just about a month ago, give or take, or 2 months ago. So, and I said 5 to 7% rally in the first quarter, which we got. Now I think we're in a consolidation, almost slightly disappointing on the economic short term. I think that I'm going to give you some 3 or 4 big numbers. A new high, 1531 or higher in front month S&P futures would make me extremely bullish on a momentum concept of trading. If we go underneath 1472 on a closing basis 2 to 3 days in a row, I would get fairly bearish technically, because that would be, in my opinion, a trend change of some kind. We could go all the way down to 1460, 1455, but I think we will hold very nicely. And I do think that after we get through a consolidation period, we'll have new direction. Remember always, trading futures or option to futures involves risk of loss, not suitable for everyone. Please give me a call. Good luck and good trading.